not to mention CPI and the Fed. Scott Bauer, CEO of Prosper Trading Academy. Thanks for joining us as always. And it's interesting, Scott, because on the year right now, we are up a little more than 1% for the S&P 500, and the Santa Claus rally was also positive. And I know that these things can be silly, but there's a lot of historical data suggesting that when you have the first 5 days of January positive, that Santa Claus rally in play, and then, we don't know this is so far way off, if January is higher, the S&P 500 on average closes higher by 20%. Obviously, a big hurdle ahead for that January higher with earnings season. What are you seeing, and what do you think the importance of that value trade is? I think down now just about 5% over the last year.
Yeah, and Abigail, you also have the fact that coming off of a year with such steep losses like we just did, over the last 70 or 80 years, the market outperforms that following year somewhat like 80% of the time. So, if you want to throw out, those stats like Santa Claus rally, first part of the year, January effect, you've got that as well. But I do think that value is going to carry or lead the market for at least the first couple of quarters of this year, because I don't think we've seen the worst yet with upcoming earnings for both maybe this quarter and next quarter, because I think that we have yet to see the damage that's been done to the market economically from quarters 2 through the end of the year in 2022. I don't think that's really flowed in yet. So I think we could see weaker than expected earnings now, next quarter, which could set up then a nice rally towards the third and fourth quarter, which also could set up a really nice time to look at some of those growth stocks, maybe, end of second quarter going into the latter half of the year.
Yeah, and a Bloomberg MLive poll did find that most investors think that there is going to be an earnings contraction. I guess that the second quarter, that it's most likely that there's going to be something serious, but that this first quarter could be kind of brutal as well. So value right now, do you see that as a hunkering down spot, and that's why money will be flowing there?
I do. I think that's the safe play, if you will. And investors at this point are kind of tired, right, of getting burned. So I think people are looking for that safety trade, if you will, which really that is the value trade right now. But that being said, Abigail, I think there's actually some sectors and a few stocks out there right now on the growth side of things that are very interesting and very compelling to me. Not that I would want to allocate 100% of my portfolio to them, but stocks like a CrowdStrike, a Net or Cloudflare, and even a Shopify, I think those are stocks that are worth taking a look at and maybe dipping your toes in.
Well, very quickly, let's bring in options then and volatility with the VIX. A lot of folks this year, and actually over the last year, saying the VIX is broken because it hasn't really moved all that much between, let's call it 20 and 30. What do you say to this?
What I'd say is that the zero DTE options, the same day options in the S&Ps, that has really, I don't want to say taken a proxy for the VIX, but a lot of retail money and a lot of institutional money that ordinarily would have been taking positions or playing something in the VIX, they're looking at those zero DTE options to get immediate returns, immediate results. So I think that's taken the edge off the VIX a little bit, but don't count the VIX out quite yet.
Oh, that's interesting, yeah, because a lot of folks saying that it has to do with long institutional money not being long enough to hedge, but that's an interesting explanation as well. Scott Bauer, CEO of Prosper Trading Academy, thanks as always for joining us for Options Insight. And from New York, this is Bloomberg.